Hello everyone, I hope you guys are having a wonderful day, making some really good trades. And yep, let's just get into it. Right now we can see that Bitcoin is at 20,576. We have a 13 and a -5 on the DBSI on market cipher A. Nice green candle so far on the weekly time frame. So let's see if we get some follow through from last week's rally, down from 19,000 all the way up as high as almost 21,000, I believe. I think we reached 20. Oh, we did reach 21,078 on this chart right here, so that's pretty nice to see. So we did touch 21,000, we came back down. Now right now the S&P 500 and the futures are red at the moment, but we are at some key resistances right now around 3,900. But that doesn't mean the rally can't continue, and we could actually easily get over this orange trend line right here. But again, remember, we do have a lot of news coming out this week that I'll be getting into in just a few moments. Just want to finish my analysis, and then we'll talk about it after or near the end of the video. Now let's take a look at the daily time frame. We can see that we have a 13 and a red dot right now, so we could easily see a pullback today or tomorrow, depending on what the market conditions are when we open tomorrow. I don't think we have too much news tomorrow, so the market should be pretty calm, I think. So let's take a look at the 4-hour as well, see how that's doing as well. We still in that green money flow view up is pretty far extended towards the downside. I could actually see it start to come back up right now. We could bounce from this level, at which point we could start to see a retest of the $20,979 level. And if we do break this level, we actually get over it. I'll just show you guys what I'm thinking. If we do come back up here and break it, and then we start to come back and retest as resistance once again, or sorry, to test the resistance as support, then we could easily see another rally up to $22,553. So that'll be really nice to see. Again, if you guys want to see my trades for crypto and for stocks, you guys can join the Discord with the link in the description. If you guys want to see my profit loss history, it is also posted on my website, so you guys know what you're buying. Now let's keep going. Let's take a look at what the S&P is doing right now. We are getting rejected right here around 3,900. The Nasdaq also getting pretty close to some major resistance around 11,800, or around this blue trend line around 12,000. It would be some major resistance as well. And let's take a look at the Dow Jones. And oh boy, the Dow Jones, what a massive rally for the Dow Jones, just pumping up like crazy, coming up to 32,986 right now. Slightly in the red, only down about 32 basis points. Markets are recovering a little bit right now, but basically flat, not too much action. Let's take a look at the DXY, and the DXY is currently at 110.88, so that's pretty good for the DXY, but we are getting a bit of a bounce from the 109 level. Could we go down from these levels? Could we go a little bit lower? Yeah, we could easily go a little bit lower. We could even come down to 108, but again, this is going to be depending on what the FOMC meeting, what their decision is going to be. So let's take a look quickly at the calendar, what we got this week. So on Monday, like I said, I don't think we have too much news coming out on Monday, so that's going to be a pretty quiet day for the market, so we might rally there. On Tuesday is going to be the day before the FOMC meeting. We actually have the jobs opening, and then the ISM manufacturing PMI that you're going to be wanting to take a look at there. And on Wednesday, we do have the FOMC meeting. The statement and the federal fund rate is going to be, the expected rate is to be an increase by 75 basis points. But what's going to be really important is the press conference that comes after. So what Jerome Powell is going to say, you know, the markets are really expecting a pivot, right? The markets are very, very excited about the pivot. The pivot's coming. Buy your tech stocks now. They're going to lower the rates, but in my opinion, I don't see a pivot coming anytime soon. I think it's far too soon to get a pivot right now. I'll just show you guys why I'm thinking why they're not going to be pivoting anytime soon. So we can take a look at what the current inflation rate is. It's actually right now it's at 8.2, which is very, very high. And historically speaking, the federal funds rate is extremely low to what the inflation rates have been in the past. So you can take a look at the 1980s, right? So in the 1980s, we had inflation as high as 15%, which is incredibly high. It's insane how high inflation went back then, and it was actually reported accurately. And we can tell that in 1980, they actually raised the rates to 18 to 20%. They raised the rates to 20%. So that's very impressive, because that's higher than what the the inflation levels work, because that's what you have to do. You have to raise the interest rates higher to entice people to stop spending money and to save their money, right? And then inflation will start to go down. Prices will start to go down because people are going to stop spending. And when you stop spending, demand goes down. When demand goes down, prices go down. So there you go. It's just butterfly effect. So the fact that the Federal Reserve has only the rates up to year, the big old 3.25%, it's cute. It's very cute compared to what they did back then. But again, we have the amount of debt that the US government is carrying. Of course, I don't expect them to raise the rates to 10% because then the Ponzi scheme would be over. The party would be over, right? They wouldn't be able to keep doing what they're doing. They wouldn't be able to print any more money. So eventually they will pivot, but it's only going to pivot because we're going to get unemployment to skyrocket, because right now unemployment is very, very low, right? Why would they pivot? Everyone's employed right now, according to them. Once unemployment gets to 6-8%, maybe even 10, then you have civil unrest and everyone's rioting. Yeah, you bet your ass they're gonna cut the rates, and then everyone's gonna be happy again. But then we're still gonna have, even if they have high inflation like 4 to 5%, they will still cut rates if unemployment is very high, and then you have even more inflation then. But that's a problem later. We're gonna kick the can down the road as well. And the fact that the Fed keeps stating that the personal savings rates is so high and people have saved so much. Sure, let's take a look at the personal savings rate. Oh wow, it's at an all-time low. Let's take a look at the max. It's probably nearest one of its lowest levels even since 2004, 2005. Around that area, it's nearing one of its lowest levels ever. And let's see where they're putting where the consumers putting all the money on. Oh, look at that. It's all on debt. They're putting it all on debt. Let's take a look at the 5-year, 1 year. It's only been increasing. They're putting everything on debt. Nobody has any money. Eventually, this borrowed money is going to come due. And once it's come due, because the rates are so high, people won't be able to pay. So you could potentially have a catalyst for a market crash right there. Now let's keep going. Let's take a look at the WTI right now. Getting a slight pullback right now, down about 1.43%. Nat gas, I believe, is getting a nice bounce up over 4.5% right now, so that's looking quite good for natural gas. But ultimately, I think nat gas next big bounce is going to be coming potentially around this area, $4.62, not $6.52. So $4.62 is going to be my next a major area of support. And I told you guys many times in the Discord, for those that tried to long this area around this trend line, I told you guys I did not like this price action chopping sideways right here. To me, this actually looked like bearish consolidation. We did not get a strong bounce like we did back in July, and that's why I did not long this area. I longed the blue area, which was my next level of support that I took a look at, and that's exactly what happened. We bounced off of this level, and you guys that made this trade actually made it a great amount of money. Actually, Kenya was in when this was longing Boyle, which is a leverage ETF to long natural gas, and he made a great chunk of change. So you not only get my advice, and sorry, not my advice, but my trades, you also get Kenny's trades and all the other traders that we have in our Discord as well when you join. Now let's take a look at gold and silver. Gold getting a bit of a down day right now. Not really down much. I would say it's down about $3 from its Friday close. If it comes back down, you got some support coming in right here, right around 1619 or 1620. But after that, if you break the support level, you could start to take a look at 1555. And after that, my main target is going to be around 1450 to 1454, which I believe is the 0.618 retracement from the lows right here. I think we've done this many times, but we can still do it again to show you guys that don't know what the Fibonacci retracement is. So from the lows to the highs, you get about 1440, which is basically around that 1454 area that I've been taking a look at, which is around these previous lows right here. So that's going to be a major area of support for gold, in my opinion. Now let's take a look at what could potentially be happening for the FOMC meeting if I'm correct and they don't pivot and they stay very hawkish. Because why would they pivot now when the rates are so high? And something that people should start following as well is, they used to say don't fight the Fed, right? When the market was rallying, so just long everything. don't fight the Fed. What you want to do is the same thing essentially, is don't fight the Fed that's raising the rates, right? When you were printing money, you didn't fight the Fed and the market was rallying, you would have done amazing. If you're trying to short the S&P while they were printing money, well, you probably suffered a lot because the S&P from the lows were up, it was up like 121%. Now that the Fed is tightening the rates and the markets are addicted to all this money printing and they just want them to pivot, well, they're not going to pivot so easily. And people who keep longing into these massive long positions right now, yeah, you can long the bear market rallies, but you don't want to stay into these long positions for forever, right? You want to take your profits quickly, you want to sell the rallies, and you want to get into some short positions because the Fed is tightening. So don't fight the Fed, right? Same logic. But yeah, you guys know where I stand. Right now, I'm still expecting the Fed to stay hawkish and potentially not pivot yet. I know a lot of people are expecting a pivot, but I don't think they will do such a pivot yet. But if they do a pivot, it would be like a soft pivot, something like they do raise the 75 basis points, but then they say they're going to pause and wait and see what happens. But then the market's going to rally, and then inflation's probably might, keep going upticking from there, depending on what the CPI report is on November 10th is when the next CPI report is going to be. And then let's take a look finally on the calendar, what we have for Thursday and Friday. I believe Thursday, there's not too much news. There's the unemployment claims for US on Thursday, and on Friday we have the Canadian unemployment change and the US unemployment rate are both going to be coming out, and they're actually expecting the unemployment rate to uptake slightly to 3.6%. So if we do get more, so if right now the market is reacting positively to bad news, if we get some bad news coming out for the economic numbers, the markets will rally because they will expect the Fed to start pivoting. All right, guys, thanks for listening. If you guys want to join the Discord and see my trades for crypto and stocks, the link is in the description. Love you guys. Thank you so much for your support. And don't forget to like and subscribe. Peace.